So friends, we are already in FY27, and if you look at the last 18-20 months, the market hasn't been very easy. Especially in the broader market, we have seen a meaningful correction, and many stocks have gone through time-wise as well as price-wise consolidation. Now the interesting part is, this phase has actually started creating opportunities. But the biggest problem with majority of retail investors is, there are 5,000 companies listed in the Indian stock market. How do you identify the right set of 20-25 companies? So in this video, let's simplify this problem. I'll walk you through a very practical framework using predefined filters that I personally use to shortlist good companies. So here I would be using Ticker platform, where they've got a screener section. Now I would use predefined filters to shortlist a right set of 20-25 companies. So let's start on screening. Here you can see there are 5,740 companies. The question is, how do you get the right companies for your investment purpose? For that, you can see on the left hand side, there are a lot of filters. First filter I generally use is market cap. And here I put a filter of a market cap in the range of 2,000 to 2 lakh. See, the idea here is simple. I want to avoid companies that are micro cap in nature because they are quite volatile. And that's where I put a lower cap of 2,000 crore. And on the upper cap, I want to avoid companies that are mega cap in nature, where the growth is usually not that high. Right, so I put a filter of 2 lakh crore. Again, it is personal. You can just change it as per your requirement. Now you can see that there are 1,153 companies that have been filtered out. Second very important factor is growth, right? Because growth is where the market rewards the stock. So here I would use two factors for growth. One is your revenue growth and second is profit growth. Here I just need to add the filter. First I would use the revenue filter. And here you can just quickly search revenue and you would get a good list. And first I would use 1 year historical revenue growth. Just click on done. Let me just remove these parameters first. And right. So now the question is, what is the revenue growth you should expect in a fundamentally good companies that has got a good prospect? Generally, I like companies that are growing at more than 15% rate. So all I'm doing is putting a minimum cap of 15%. And there you go. Now you've got 478 companies where the revenue growth is more than 15% in last 1 year. Please note that I'm using 1 year historical revenue growth, but then to understand the consistency of revenue growth, you can use 5 year revenue growth as well. Second filter would be the earning growth, right? And there I would use EPS, earning per share. So here I would use 1 year historical EPS growth. Again, the same filter. I want companies where the profit growth or earning growth is more than 15%. And there you go. Now you've got 338 companies where the market cap is in the range of 2,000 to 2 lakh crore and the revenue and profit growth is more than 15% in last 1 year. The next very important factor is valuation, because you don't want to overpay for higher growth, right? And that's where one of the most common metric people use is PE ratio. But the problem with PE ratio is that it could be misleading. So a company may command a PE of 40 or 50 and may still continue to create wealth, because in that case, the company might be growing at 20-30% earning rate. And on the other side, there might be a company which is commanding a PE of 10, 15, 20 and may not create wealth for investors, because there might be a case where the company's earning growth is very low. And that is where one of the very important metric that you should use is PEG ratio, which is PE divided by earning growth. I'll quickly show you how to do it. So PEG ratio, there is a custom metric that you need to create. I've already created it. If you look at this filter section, there's this PEG ratio that I've created. You can also create your own custom metric. Very simple. All you need to do is mention PE and just divide it by EPS. Now, very important factor here. Usually mistake people make is when they put this EPS, they generally consider the historical EPS. But if you are investing in a stock, you need to look at the future earning. And that is where Ticker has got this 1 year forward EPS growth metric. Although it is a paid metric, but it is extremely useful. So all you need to do is put it here and create an add filter. I've already created it, so I'm not creating it again. I'll quickly show you that particular metric. So you can see PE ratio divided by 1 year forward EPS growth. Right. So before that, let me quickly show you. They've got certain metrics that are free. Most of them are free, but there are certain important filters that are available for paid members, right? So for example, within growth, you can see 1 year forward revenue growth. There's a star, which means it's a pro member subscription. And there are a lot of other factors like within valuation, you can see PB premium versus sector. So very important metrics that are there where you can enroll in the pro membership and you can access them. So personally, I'm a pro member of Ticker Tape for a long time and I find it extremely useful. In case you also want to explore the pro membership, you can get additional 45% discount with my code Sahil45 on their annual membership. I think this is a stealer deal. You get a lot of value for the money. Now let's move on to the PEG ratio metric and let's add it here. There you go. Now what is the number that you should put? Ideally, the PEG ratio should be below 2. Okay, the reason is simple. So for example, let's say a company command a PE of 50. But if the growth is, let's say 25-30%, then PEG is less than 2, right? So very simple calculation. All I'll do is I'll put a number of 2 here and there you go. So now there are 161 companies where the market cap is in the range of 2000 to 2 lakh. They're growing at 15% rate and their PEG ratio is less than 2. Now this is important, but then I also want the quality of growth, and that's where your ROE comes into picture. That is return on equity. So if you simply type return on equity, again, what is the number you should put? Ideally, I like companies where return on equity is more than 15%. So simply put this number 15. There you go. Now there are 88 companies that satisfy our filter criteria, right? And again, very, very interesting name you will find here. You've got PFC, then BSC, Muthoot Finance, Cholamandalam, G Vanova, Wari Energy, Indian Hotel, and so on and so forth. Now here, please note that you can also use a metric called ROCE, that is return on capital employed. The only catch is that when you use ROCE, it will filter out all the banking and financial sector companies because ROCE metric is not applicable there. And that is why I'm not using it at the moment. Otherwise, it will filter out companies like Bank of Maharashtra, and you've got also a lot of other banking and financial related companies that will, Sundaram Finance is there, so it will get filtered out. Karur Vysya is there. Right? So if you want ROCE, you can apply it separately. Also, I'm not using debt to equity. That is again a very important metric. The reason is simple. If I put debt to equity, ideally that should be less than 1, but then it will filter out all the banks and financial companies. So here I'm avoiding it. And finally, there is one more metric that I would use, and that is your percentage price above 1 year SMA. Now the idea is simple. While the company is in growth phase, I want to bet with the trend. I don't want to go against the trend. And that's where I want to know the companies where their price is trading above their 1 year SMA, and SMA is your simple moving average. And that's where you can put the number here, percentage from 0. Okay, and if you just enter, you will see there are now 35 companies that has been filtered out of 5,000 plus companies. Again, you can go through the names. Very interesting. I'm not naming them because the names can change further. So you have to do your own filter criteria and identify. But so broadly, these are the filters that I use where the growth is good and the PEG ratio is less than 2. So valuations are also reasonable as compared to earning growth. And of course, the stock is also trading above their simple moving average of 1 year. Now again, this is just a filter, okay? This does not mean that you can blindly invest in any of the companies. This is the first step of shortlisting right set of companies. The next very important step is to go through each of these names and identify the investment opportunity. For example, there are a lot of promising names here. Let me just take one example, what you should do next. Let's take Acutaas Chemical. So if you click on Acutaas Chemical, you will get entire detail of the company on your Ticker Tape platform. For example, if you look at 1 year of price movement, this stock has generated 129% return. So exceptional growth in last 1 year. In fact, 5-year growth is extraordinary, 454%. If you scroll down further, you can look at various other metrics. So first of all, I try to understand the financials of the company. And for that, I look at the annual view and I try to understand how has been the growth in the company, right? And look at this, in last few years, the growth has been extraordinary. 22-23 was 18%. Before that, it was 52%. Then it went to 16%. Then next year, 41%. Then from FY25 to 26, it has grown at 34%. Likewise, if you look at the EPS, that is earning per share growth, FY23-24 was negative, but before that 57%, then 129%, then 255%. The growth has been extraordinary, right? Then very important aspect is every quarter these companies publish their result, and with the result they also publish the investor presentation report. So you can see here investor presentation from July 30, October 17. The latest one is April 30. And that is today's result. I'm recording this video on 30th of April, and company has recently published its Q4 numbers, and look at the performance. The numbers are extraordinary. 43.9% growth in Q4 of FY26, and then if you look at the PAT, it has grown from 627 crore to 1,343 crore. So more than 100% growth in PAT. Right? Again, I have to deep dive further to understand where has been the growth coming from. Of course, before that, I need to understand what is the business of the company. Since I already know about this company, I'm looking at only these important parameters. But the idea is to understand what is the business of the company, what is the growth driver, and that's where you need to go through these documents. Right? Apart from this, you can look at the peer comparison, and of course, shareholding trend is again very important. So for example, FIs that are net seller from Indian market have actually increased stake in the company. In fact, recently from December to March, they've increased from 16.6 to 19.48%. So that shows the confidence of foreign institutional investors. Apart from this, there are also sentiment analysis for the company, and forecast is there. So you can go through all of these things, like what are the growth drivers, what are the challenges, and that will give you a good idea in terms of understanding the business of the company. So Ticker Tape provides a very comprehensive report of each of these companies. So this is how I try to shortlist right set of companies out of universe of 5,000 companies. Now apart from this, there are a lot of interesting predefined screeners that you will find on Ticker Tape. Let me quickly show you some of them. So you can see here popular screens, and then you have got fundamental screens, and then you've got technical and momentum screens. So let's click on this more, and here you can see there are certain basic screens, like you have got near 52-week low, large cap stocks, mid cap stocks, right? And then you can identify cash rich small cap companies. So for example, if you load the screen, you will find companies from small cap space that are cash rich. And there are very interesting names like Sona BLW, Delivery, Anand Rathi Wealth, Karur Vysya Bank, CDSL. Apart from this cash rich large cap screen, you have got a lot of other interesting screens. For example, you have got something called FII favorite. And if you load it, you'll find companies where FIs are showing interest, where the holding is more than 5%. And you can see a lot of interesting name in this list as well. Apart from this, you have got further screens that you find in Pro feature. You've got premium features. For example, you've got something called Momentum Monster. You've got Value with Momentum. And again, if you load the screen, you find a lot of interesting names here as well. So overall, the idea is very simple. You can use these predefined filters and create a set of stocks that matches your criteria. Again, I have used certain features. For example, I used 15% growth in earning for both revenue and profit. You can, let's say, want to identify further growth companies, you can put 20% growth. Right? Likewise, you can play around. There are a lot of filters that you will find within profitability, within growth, within valuation, and that way you can play around and identify a lot of interesting names. So that's it from my side. Just wanted to share this particular feature and how I try to identify very interesting names. So that's it, folks, for this video. In case you want to explore Ticker Tape platform, I'll provide the link in both description and pinned comment. And also, if you want to explore the Pro membership, you can get additional 45% discount with my code Sahil45. So do explore that. I'll see you in the next video. Till then, take care.